Alright guys, this class for people who are new with us. So what I'm going to talk about today is the methodology that I use to trade Forex. And I've been trading Forex for over 15 years now, such a long time. I'm trying to find, a couple of good traders so I can train them myself so they can start working on my funds, and I'll give them percentage of whatever they make for me. A couple of things I need to say. I started trading order flow back in 2008, 2009, and the reason I started trading order flow was I realized, the only thing that moves the market is supply and demand. So that's the only thing that moves the market, which is orders, right? So I don't care about technicals, I don't care about fundamentals, and the only thing that moves the price is the orders that you see here, right on my screen. Trading with technical analysis, or some people, they like fundamentals. They say fundamental is what moves the price. Some people, they say technical analysis is something that moves the price. But unfortunately, both of them are wrong, because these days you're gonna see that the more news comes out, and a currency should get stronger against the other one, it will get strong for maybe half an hour to 45 minutes, then all of a sudden it goes back where it started. So for that reason, there's so many things behind, like let's say fundamental news comes out, price moves in one direction, then all of a sudden big financial institutions comes in the market and push the price in another direction. So to me, trading with fundamentals or technicals is like driving your car using rear view mirror. So the only way that you can drive your car is just look in front of you. So you cannot look backwards and drive the car forward. So having said that, what I do is I have an access to a couple of hedge funds and big financial institutions order flow. So I can see where all the orders comes from. What you see on my screen is just only a piece of puzzle, right? For some security reasons, I'm not able to show you the bigger picture because of a couple of reasons. That most people by now, they will give me the right not showing those type of information, because I asked people many times not to record the stuff, put it on the internet, and I caught a couple of people do it. So if that happens again, I'm afraid that I have to kick a couple of people out. These are the type of information that not only me but other big companies, they don't want retail traders to know about it, right? So that's why the only type of information that you can find out there is what you see down here. This is Euro USD, and these are limit orders, right? So for example, let me just take a quick screenshot of what I'm talking about so we can talk about this in more details. Sorry guys, I said this many times before, I'm not a good teacher, but I'll try to give you guys as much information as possible. By the way, if anybody has any question, please ask it in the webinar so I can go ahead and answer your question after the webinar is finished. Just give me a quick second guys again. Alright, so what you see on my screen is bids are on the left hand side, offers are on the right hand side. By the way guys, plus 30 pips hit on Euro USD short. We caught it at 02 right here, so we almost got the top but not 100%. So we're short from 02, plus 30 pips is hit. So the third target is hit. Alright, sorry about that. So let's go back to the screen. So what you see first on the top is the total amount of volume available on the bid, and on the right side is the total amount of volume available at the offer. So let's see what's going on here for a quick second. Maybe we have another trade. No, we don't. Okay, so keep this in mind for now. Alright, so what you see next is you're gonna see that there is $2 million available at this price. So the price is 111.82, right? There's 2 million available, then 10 million, 4, 20 million, 15, 18, 9, 16 and a half at specific price points. And on the offers, what you have is these prices with the volume attached to it. So a couple of times a day, the way I work is couple of times a day, what will happen is I give you guys bids and offer levels. These are the major volumes that I see on my book. So most of you guys know that sometimes they're dead accurate to the pip. Sometimes, you know, trade market goes through the bids or the offers, and you know, we're gonna look at the next level. So what happened sometimes is, like, let's say I say a big order is gonna hit the market. So what you can expect sometimes is, like, let's say 200 million, right, is on the buy side. So someone is trying to buy $200 million. So what you need to do, first of all, you have to think about it as a market maker point of view. The market maker point of view is they're buying on this side and selling on this side, right? They're selling at the offers, buying at the bids, and we do exactly the opposite, right? So when we buy, we hit the offers, and when we sell, we hit the bids. And guess what? 97% of the times, retail traders are on the wrong side of the market because they're not following the big money. Another piece of the puzzle you need to have is time and sales, which you don't have an access to. And second, you need to be able to see what other banks are doing at the same time, because what you see on this screen is maybe a combination of a couple of liquidity providers, right? Not all the banks, or let's say, at least 10% of the major flow that comes into the market. Because what you see here is liquidity provided by the liquidity provider is different from broker to broker. This is one broker only. Later on I'll show you a couple of screenshots of my access, so you'll see the big difference, right, between what you can get from your broker and what I can get. And that makes the difference between making money or losing money at the end of the day. So what I do is I'll give you the bids and offers, and if I say, like, let's say anything over $200 million, someone is trying to buy at AD2, what could happen is, if that person tries to buy 200 million all of a sudden at market price, because you guys are used to MT4, right? There is no way on MT4 that you can buy at this price and also sell at this price, right? There's no way for you to do it. The only way that you can do it in MT4 is buy at the ask and sell at the bid. But sometimes what happens is you want to buy at the bid and sell at the bid, right? And we're going to get into hard bid stop later on and how to use it to save yourself some money at the end of the month, because it will really make a big difference, right? I don't care about people that they don't understand it and they don't want to understand it. So just try to understand what I'm trying to talk about. If you have any questions, let me know. Since I said a couple of times, I'm not a good teacher, but I know how to trade. So basically, if I cannot explain something properly, try to ask me as much question as you can, so I can transfer the knowledge that I have to you. So again, what I was saying is, if someone tries to buy $200 million at the bids, what will happen is, most times, if the order is big enough and there is not enough liquidity, he gets slipped, right? And his order is going to get filled at the worst price. So out of that, let's just say 50 million, right? So he's going to get filled 2 million at this price. Then he's going to get filled another 10 million at this price, right? And it keeps going down. So instead of pushing the price up, he will push the price down before the price goes up, right? So what are one of the things that I used to do when I was working for one of the big brokerage firms, was when a big order hits my desk, and my responsibility was to fill that order without other people knowing about this big order. I would place 10 million at a time. Some brokerage firms will pick it up. They know someone is trying to buy, right? They keep buying. So what happens is, it would push the price down. So what I used to do was, I would sell at this price, wait for the market to go down, I would buy it back at this price, because by the time his order is filled, right, now the market is going to stop and start hitting back up. So I would made like, you know, half a pip to a pip on my own account. So, you know, doing this many times a day, it counts. So this is one way of using order flow, right? So what will happen is I'll give you the bids and offers. Let me see what was the bids and offers for today. So we had offers 12.10. So we'll mark it on the chart if you guys want to use charts, right? We'll mark it on the charts. This is 12.10. Make this a little bit bigger. So I make the blue ones offers, then 12.55, 11.75, 12.80 and 85, right, which is a little bit higher. We don't really care right now. These are the offers. Now let's do the bids. We had 10.85, 11.45. So the red ones are the bids. 11.75. Sorry, this was a bid price. Just a little bit tired right now. And 12.15. Alright. So the one way of using bids and offers is, you know, you can expect the price to stall at these levels. Around 70 to 80% of times I call the trades myself, because you guys don't see what's going on when price is approaching these levels, right? So you don't see what's going on when price approaching these levels. So what happens is, if I call it myself, that's a different story. Like we had the offers today at 12.10, right? What I did was at 12.02 I called and I said I'm gonna go short. I put my stop at 12.10. I want to show you this. That at 4.57 I said we're short euro. At 12.02 stop is at 12.10. So that means before hitting the offers at 12.10, you know, I saw a big change in the market, and I figured that, you know, we're not gonna hit 12.10 anytime soon, so it's time to short. And you know, we shorted, we made some money on it. Most times when I see the price goes against me by 5 pips, I know I was wrong, because there's, you know, many things could play out when you see bids and offers. You know, a market maker could show you a $10 million trade here, right? It's not big enough to move the market, but let's just say 10 million is big enough to move the market, right? Or 20 million is big enough. So what will happen is they show you the 10 or 20 million, right? Making you think that the price is going to go up, and you keep on buying, right? Meanwhile, their intention is to go short. So they're looking for a seller, right? Someone who can sell it to them, because they want to go short 20 million. They want someone to buy 20 million. They want to buy 20 million. They want someone to sell to them 20 million. So this is the game they play. They put this order in the market for maybe 30 seconds or sometimes couple of seconds or even milliseconds. They could flash the order in the market and they go exactly against you. So these are the things you have to be very careful. These bids and offers that I give you guys during the day is just for your own information. Do not go long or short at any of these numbers, right? So let's just say you have a strategy and your strategy at, let's say, 1173.74 tells you to go long, right? All of a sudden you're gonna see you had bids at 1175. So it's a good opportunity to go long. You have the bids to help you, and you can take the trade at that time. Or vice versa. You're getting to the offers. You have a strategy tells you to go short. You can go short at these numbers with your strategy. Do not trade them by themselves unless I tell you, right? Because you have to take a look at the time and sells, and you have to just analyze the market yourself and try to figure it out. So anybody has any questions so far? Let me see who has any questions. The size varies. I'm not looking at one specific size, if that's what you're asking. I'm looking at a cluster of volumes, right? I'm looking at a cluster of the volumes. Guys, get ready to go long on euro. Don't risk too much. 2 pip stop. I'm long 62. Just 2 pip stop. Don't risk too much because this may hit 60. And get ready to exit as soon as I tell you. This is a quick scalp. So the only thing that you have to lose is 2 pips. Let me see what's going on in the market. Actually, I got 61. I got filled at 61.3. Okay guys, if you're hitting +5, take some money off the table. Okay, and I'm out. We hit 60 even, so I don't know, I hesitated for a second and I took my money off the market, but I should have been in the trade. So Enrico, the size does not matter to you, because what you see here, right, what you see here, it's maybe for a couple of liquidity providers, right, and it's not the big picture. How many of you guys are still in the trade? It was a 2 pip stop, and you should get +5 very shortly. You should be at +5 now. So I usually go for trades over 100 million, right? If I see anything 100 million and above, I will go for it. Using order flow, how many times have you seen someone use a 2 pip stop, right? Or how many times have you seen someone place a trade with 0 pip drawdown? We call it luck, but over 10% of our trade goes to profit with 0 pip drawdowns. So it will happen eventually, but not 100%. Nothing is 100% or guaranteed these days, right? So, we're gonna make mistake like everybody else. But another question somebody else asked me is Forex Live any good? To be honest with you, I take a look at their I looked at their website a couple of times, but what they show you is basically I don't believe they have access to any type of bids and offers. The way they give you the bids and offers is, they have, to me, they have a whole bunch of indicators on their charts, right? And they pretend that they have the access to those type of information. So, I don't know, you can test it, see if it works. Like, if someone has an access to those type of information, you should see the price react to those levels within 5 to 10 pip range, right? So that's that. Why do I use 350 tick charts? I don't like to use like 5 or 10 minute time frames for a specific reason, and my reason is 5 minute or 10 minute time frame, they are time sensitive, right? So we're dealing with time. But tick charts, we are dealing with ticks, like every movement in the market. By looking at tick charts, I can see what the price is doing, right? Like I don't use charts at all, but I put this on the side of the order flow and my software, so you guys can see charts right to the side of it, since my software doesn't have charts. So it's kind of visual for you guys, but the more you practice, you have these numbers, you're gonna memorize these numbers, so you don't even need to look at the charts. Once you get used to trading with order flow, all you're gonna look at is these numbers down here, right? And the software that I'm gonna show you later on, which you can see what's going on in the market. But for now, you need charts. 350 tick, I would recommend it, and the reason being is you're only trying to figure out which side the market is gonna head by looking at tick by tick datas, right? So if you take a look at 350 tick, compare it with, like, let's say 15 minutes, just look how much of the action you're gonna miss. If we do it side by side, right? So this price, and look at this. So you had more opportunities to make more money than just using a simple time charts. Yeah, tick chart gives you a much more clear picture. Is anybody in the trade still, or you guys are out too? I believe this thing is gonna go back to 1200 again. I see some good volume behind it. Yeah, the engulfing strategy uses a time chart because back then I had no access to the order flow, right? The engulfing strategy I taught people because you guys don't have an access to the order flow, so somehow you can make some money, but I don't use those strategies anymore. So anybody has any other questions? So if you guys don't have any questions, let's go to how we trade. So guys, basically the way we trade is as soon as we place the order, we calculate. First of all, I don't care if you want to use a percentage of your account or fixed lots, but I have 4 targets all the time, right? Out of that 4 targets, I have a very small target. You can call it a 5th target at 5 pips. So I always take some profits at 5 pips. The reason is, it's better to get some money from the market rather than not getting anything from the market. Remember, I keep saying this to people, trend is not your friend. So uh, I was never able to make money with trend, right? So you happen to be in the right side of the market, but show me one person who can actually catch the trend and go with the trend, right? 80%, 85% of the market, like especially in Forex, is sideways. So there is only 15% of the time which is trending, right? So why would you look for a trending market or trending currency? So, and whatever you see is daily, right? It's not long-term trend. So making money with the trend, I don't recommend it. I say trend is your enemy. Stay away from the trend. But you heard this many times that they say go with the trend, or you have to let your profit run. So how are you going to let your profit run if you have one target or two targets, right? So for this reason, I would recommend to have 4 targets at all time. The first target that we have is plus 10. Second target is plus 20 pips. Third target is plus 30 pips. And last target is plus 40. Sometimes we change the last target, which I will mention it. Like I say, move the last target to plus 100 pips or 120 pips, whatever it's necessary. So we can think about it this way. Let's say we buy right here. We set our target at this price. Then the first target is 10 pips. That's your second target. Third and fourth. Sometimes we move this to another point in time, right? Point in price. But it's very important that as soon as you hit your target number 1, you move your stop to break even. Alright, so let's go back to my software. Guys, managing trades is easy, so if anybody doesn't know how to manage their trades, let me know. In the beginning you can test this, go long or short with 4 or 5 lots, take profit plus 5, and every 10 pips take 1 lot out of the market. If you don't want to make your life miserable and doing calculations until you get used to it. So getting back to my software is we do the calculations based on the activities of some brokers. Still, it's not the big picture, but as you can see, we have about 20 brokers on the list, right? So what you need to look for is wait until the 5-minute time frame goes red or changes color, right? So forget about the imbalance, just ignore it, ignore the imbalance. Buyers and sellers, as soon as they all go green, right, and you see green on the other 3 time frames, you can go long. I will look for anything plus 400 on the 1 minute, plus 300 on the 2 minute. You see the price is coming down. Most of these are almost red, but it's not complete. So we may see the price turn back and go the other way. So once you see all green, that means buyers, right? If they go red, that means buyers losing control. Like you're seeing a push market going up, you'll see the total buyers, right? They go on the positive. Now they go on the negative, minus 100, and you see the price dropped by maybe 1 or 2 pips. So this is something that we just built, so it's your responsibility to take a look at this, come up with market turning points. I would suggest use it within support and resistance, right? And like let's say right now we're hitting support, so I'm looking for this thing to go green above 400, and these three goes green too. And usually I've seen like people with, if this touches plus or minus 800, the market moves 3 to 5 pips. I haven't tested it myself, but this is something that you guys need to test. So what you can expect is when buyers, they go negative, that means they're losing control, right? Sellers, they, like for a split second you saw buyers green, sellers red, right? That means there is an imbalance between them. So that could be an opportunity to take a trade as well. So I haven't tested it again, but both colors has to be the same. So minus 800 or plus 800 if you see, or 400 above, or minus 400 and below, right? Pay attention to these numbers and see how many pips market moves. Start writing them down, and once you find something concrete and you see consistency in it, let me know, and hopefully by that time the software is ready. You guys can help with finishing the software, giving ideas. If you see something works, maybe we can test it and give you guys the proper setting to work with. So any other question? Yeah. Yeah, basically something like that. Like right now buyers, they were in control for a split second, bought 111, and sellers, they went green. That means they're losing control against the buyers, right? So right now there's an imbalance right now between them. So another thing that you can look at the imbalance between them. Like let's say if this goes green, like this is 300 right now, you should expect the price to jump up by maybe 2 pips. We're sitting at 60.43. It dropped. So this is something that you have to figure out, either 400 or 800 or above it. I think Andy knows how to use this better than me. Guys, let me tell you something very important. Do you know why do you guys lose money? Because most of the time, I believe some of you guys spend more than 80% of your time looking for a system or a strategy, right? I'll give you a piece of advice. You always have to look for a reason not to place a trade. Look for a reason not to place a trade, right? So by looking at my software, this doesn't mean that every time it goes above 300 you have to buy. Every time it goes below 300 you have to sell. Doesn't mean that. So you have to look for a reason. Like, for a split second we had all red, right? I was looking at the 1 minute when I told you 300 or minus 300. But once you have everything red right now, over 90%, then you can see if the price is going to drop by 1 or 2 pips, right? This is actually a good addition for you to train your eyes for order flow trading or level 2. Like, by looking at this screen, if you see an imbalance, right? Like, let's say you see the offers are twice the size of the bids, then you can expect the price to go down. If you see the bids are twice the offers, the price, you can expect the price to go up. That doesn't mean price will go up every time that happens. Do you get my point? Right. So what makes a good trader is the person who can find these opportunities and takes advantage of it, right? Not that every time that you see everything green you go long, and everything you see everything red you go short. That doesn't work that way. Like, I taught people engulfing a strategy. What did I tell everyone? I said, you find you have 1 or 2 trade maximum a day. That's it. Don't look for the third trade, because the chances of losing the third trade, it's going to get high. So the more you trade, you understand that you have to be very adaptive, right, to market condition. For a long time I had 4 targets. It was fixed all the time: 10 pips, 20, 30 and 40 pips. I would never change them. But I learned from time to time that sometimes I should take profit at 9 pips instead of 10. Sometimes 7 or even 8, right? So if you're not adaptive, like, let's say, you see the market could shift, so it's time to take profits out of the market, you should. Don't hesitate. Once you learn how to manage your capital, then that's the time that you start becoming profitable. So trading doesn't mean keep your stops and targets fixed at all times, right? You put your stop at 10 pips, maybe you have to let it run to 12 pips, right? Or you should take profit at 10 pips, or maybe 8. Who knows, right? But you have to be adaptive to the market condition. So if you don't take those chances, I say, chances of your success, it goes down to 0. Well, Dark, no, you don't. You don't need something that wins more than loses. Like the engulfing strategy, like on a back test it shows 65%, but I had month that I was only winning 38% of the time. I made 20% return on that month. So if you're using a strategy that your risk reward ratio is 1 to 1 or 1 to 2, Yeah, of course, you need something, to win more than loses to make money, right? But your edge is not the strategy, don't forget. Like, I don't know how many times should I say this. Your edge is, let's break this down. Trading is 80% psychological, 20% technical. 20% is what you know about trading, right? Ins and out of trading. Strategy, fundamentals, order flow, blah, blah, blah. Money management. That's 20%. And out of that 20%, another 80% is money management. And 20% is technical or system. So if you don't know how to make money with flipping a coin, like, I'll give you guys 1 month, with $100 account, not even 100. Let's just say open up a demo account. Just start flipping coin. If you can't make money with flipping a coin, there will be no system on this planet that can make you money. I can tell you this much. Because if you cannot prove to me that you can be profitable with flipping a coin, that means something is wrong with your psychology of trading. So you either cannot be disciplined, you cannot be consistent, or you lack proper money management. Getting access to the other room, we have 2 rooms here. Donald, we have 2 rooms. One is FX level 2 trading group, and the other one is do not post here, market depth trade calls, which I only post my calls down there. We have a private room that from time to time I'll teach people some strategies. You guys do the homework, send me your homework, and once I get all the homeworks from you, I'll add you to that private group, which I'll teach you guys other stuff in that group. And once I can see, some of you guys are profitable, right? I start giving you guys my own account to trade. And, you get to keep a good percentage of the profits. No, homework doesn't mean find levels. Homework means, I'll give you a strategy to work with, right? And I tell you, do the test on, let's say, Euro USD or any other currencies. So you make an Excel sheet and you send it to me. So does anyone has any other questions so far? Like, guys, I want to tell you something. Like, I just want to be honest with you guys. I made over $1 million myself, right, in this business. So when I started becoming profitable, that was the time that I sat down, put a proper money management in place, proper trading plan, and treated this business as a business, not as a hobby. No, my money management is different. Sometimes I risk more, sometimes I risk less, depending on market condition. So lot sizes are different. I trade anywhere between 50 lots to 200 lots at a time. And the only strategy I use is order flow. I take a look at the market, see what's going on, and I take a trade. You have to treat this as a business. Meaning that, if you're working at home, you have to dress like, put your suit on or change your clothes as if you're going to work. Yeah, I wait for imbalance between bids and offers. Another type of trade that we call time trades, is sometimes I say if by, let's say, 7:15 in the morning, price stays between, let me show you on the chart what I mean. So let's just say price is sitting at 1160 right now, right? I would say if by 7:15 a.m. price stays within this range, I go long at market. That means I have seen bids and offer in this range, but bids are like maybe twice or three times the size of the offers. I confirm it with time and sells. If everything checks out, what I would do is right exactly at 7:15 a.m. exactly to the second, I will buy at market price. I don't use limit orders. I don't use anything else. I will buy at market price. Guys, I'm gonna buy it right now, 60. Let me see if I can get 61. We're gonna miss it big time. I'm gonna put my stop at 54. It's not gonna work. We lost the trade. If I can get 61, I go long. This may shoot up pretty fast. There we go. We are already behind 3 pips. Yep, we missed the trade. So never mind. I was talking too much, so we missed a very good trade. Alright guys, so I'll talk to you guys later. So keep this chat room open. As soon as I have a trade, I'll let you guys know.